Hi everyone, welcome to Values. So today we're going to look at Beyond Meat, and they've just released the results and market doesn't seem to like it. Down negative 24%, which is an insane drop. But as you have been watching the markets in the recent days, you will actually not find that weird at all. You might actually find negative 24% not that bad, because we've seen much worse. We've seen Unity software drop a ton, and then we've seen Upstart drop a ton. So why would we find negative 24% that bad? Though you might look at it and go, actually yesterday they dropped negative 13%, and today pre-market they're dropping negative 24%. So you add that together and it's actually quite a bit. So we're going to dive into the financials today and go, how bad was the financials, because the market does not like it. So net revenue was $109 million, and that's an increase of 1.2%. So not even a growth company, barely growing, which is kind of shocking. Gross profit was 0.2 million. So which gives them a margin of 0.2%. So yeah, overall the cost of goods sold is extremely high. And you haven't even counted the other admin costs, which basically puts them at a negative, a loss of $100 million, which is incredibly shocking. So not only is their revenue 109 million, their loss is 100 million. So practically they might as well just be shoveling money out the door at this rate. So yeah, I can see why the market doesn't like it, and actually negative 24% from what we've seen lately is actually quite positive, because for a company that's just losing so much money compared to their revenues, that's a rather shocking kind of result. So yeah, we can look at the breakdown of that. So in the US, the revenues are about $83 million. $68 million of that is from retail, and it has been going up. So that went up 6.9%. So the growth in the retail has been decent. It's actually the food service area where they've dropped to 15.49 million, and that was from 16.7 million, and that was a drop of 7.5%. So they've been growing in areas and reducing in others. But overall, in an international part, retail and food service has been dropping overall. Retail dropping 6.2%, and food service has been dropping 8% in international. So yeah, apparently, so overall, it's just the US that they're doing well now. Internationally, they're mostly facing more competition, or the people aren't as favorable with their products. So get this, like gross profit was 0.2 million, or gross margin percent was 0.2, and that's down from 32 million for gross profit or gross margin percent of 30%. So we've gone from a gross margin of 30% to 0.2%. So not great. Really not great. They do have a Beyond Meat jerky that they're releasing, and they say it utilizes a complex and high-cost manufacturing process. So that's the one thing as well. Manufacturing costs associated with Beyond Meat jerky are expected to significantly moderate. Significantly moderate beginning in the second half of 2022 with the process optimization. So maybe the cost start is always going to be higher with the new product, but like that loss is massive, like 100 million net loss compared to 27 million a year ago. So the loss has just gotten worse. Obviously things are more expensive now. Even the adjusted EBITDA, which is usually the savior, can't save this number. It's even with the adjusted EBITDA, it's 78.9 million. So overall, not looking great. The cash and cash equivalents is $547 million. So that's a bonus. They have some decent amount of cash, But when you look at the fact that they have $1.1 billion in debt, yeah, that's not looking great. Net cash used for operating activities was $165 million. So they have more or less maybe 3 to 4 quarters of money left in them, which is not great because if any of the next few quarters are any worse, or the cash flows are are used a lot more, then yeah, they're not going to last very long in that sense. So they produced 109 million for this quarter, but they think net revenues for the whole year will be between 560 million to 620 million, which would be an increase of 21 to 33% compared to last year. So overall, that growth rate looks a little nicer than what they've actually produced for this quarter. This quarter just looks horrible. But overall, they expect revenue to be rising and the growth rate to be a lot higher. So yeah, so overall, yeah, like first quarter looks terrible, but they expect preceding quarters to be a lot better. Yeah, so overall, yeah, like it's a tough one to call because like they're losing money. They in general they're just losing money, which is not great. So yeah, they had 733 million at the start of the quarter, and then by the end of that quarter, they had 547 million. They used what was it? About 186 million or so in that quarter. Okay, so there we go. So yeah, yes, 186 million in that quarter, which is quite a bit. And as mentioned, that's probably going to last about 3 quarters unless their cash flow just improves, which it likely should improve if their revenues are going to be higher in the next quarters. So likely they have about enough money for 4 quarters. So no pressure to raise too soon. But if the next quarter is similar or worse, then they could be basically running out of money. But if they can manage to improve the situation, then maybe it's not too bad. But still a loss-making company, and the market's not going to like it. So overall, negative 23%, I guess it's okay. Like horrible first quarter, but looks like the next few quarters are going to be a lot better. So overall, the market's kind of gone with the difference and said, it's not like this quarter's bad, but if the preceding quarters are better, then we're not too worried. Yeah, overall, it is a negative sentiment on the company because it's not generating any money in terms of profits. So yeah, current valuation is $1.92 billion, and it's going to drop 23%. So yeah, you kind of get the story of these companies. If they don't perform, it gets sold down, and Beyond Meat is really no different. Overall, bad first quarter, but looks like next few quarters will be good. So market's kind of half and half. They've forgiven them in some aspects of it, but they don't think they're worth as much. Like, I mean, that's the problem, right? If you're producing revenues but you don't really make money on those revenues, then do you really deserve much of a multiple, particularly if you're only growing 20 to 30%? So yeah, in a sense, like if it's based on what we've been seeing the last few days, this company should be basically trading closer to $1 billion rather than closer to $2 billion. So potentially this stock price actually drops a bit more because like what's the value of a company that doesn't make money? Like, I mean, it's cool, it's in a good space, but you gotta make money, right? Particularly in this market. And they're burning a lot of cash. So where's the really good points of this company apart from what they do? Like, there's a lot of competition now because the longer they keep doing this, the more competition that keeps coming into the market to compete with them with plant-based products. And yeah, like it's not looking good because there's a lot of competition. They haven't managed to make the most of their advantage, and the worry is that they may not be able to make any more of the advantage because the competition's so high that they may not have an advantage anymore. Because take it back well over a year ago, even about 2 years ago. This company looked like they had a good advantage. They were moving quick. They were growing quick. But now it seems like competition's here, and they haven't really made the most of it. They're not even in, making much money or any money. They're actually losing a lot of money. So overall, not necessarily a great company to be buying into, even though it's dropped a lot. Like in the past year, we've watched this company go to like $145, and now it's at $26 in the pre-market, less than $20. So overall, massive destruction in value. But again, it's quite familiar with the quite a lot of stocks that we're actually seeing on the market. Like I don't think this one's worth looking at too much until they at least show some really good numbers in the second quarter. Because if the second quarter is bad, like it's not gonna, market's probably not gonna react too positive with this company. Particularly if it's burning a lot of cash and it looks nowhere near profitability. Then like it's a worry for the company as overall. But like for me, I'm probably not that interested in the company in terms of like taking the shares, because even though it's dropped so much, the value just doesn't appeal, particularly if they're not, consistently growing strongly. And just the losses kind of, put a bit of worry that they would have to raise money. And a year ago, capital was cheap. Today, it's not that cheap. So any company that possibly might have to raise money kind of doesn't really warrant much of a thing for me, because I kind of want to avoid companies that have to raise money, because it's not going to be great on the share price when it does happen. But I guess we'll see what happens with Beyond Meat. But it just sums up how the market is lately. That a year ago, every company was at the peak, and right now, all companies are just being sold down to the ground. We'll have to see how things continue. But until then, good luck investing, everyone.